Hi everyone, welcome back to Saheb Academy. Today in the 7th video of depreciation chapter, we are going to solve our 8th problem, which is actually illustration 9 from the ICAI study material, right? And here the method is straight line method, and we are also selling tangible fixed asset in this question. Okay, there is disposal basically. It's really simple, don't worry. Let's just see how this question will be solved. Fine, let's begin. See the question over here. A firm purchased second-hand machinery on 1st January 2018 for 3 lakh. Okay, second hand machinery we have purchased on this date, 1st January 2018. Fine. Subsequent to which, just after that, 60,000 and 40,000 were spent on its repairs and installation. Yes. See what's happening over here. What did I tell you in the conceptual video itself? That whenever you make any expenditure which is directly connected with the acquisition of the machinery, acquisition of the asset, then it is added with the cost. It is capitalized. It is capital expenditure. Now here see, they have purchased a second-hand machinery of 3 lakh, and then to install that they have spent how much? 40,000, and to repair that they have spent 60,000. Now you might think, sir, you have told us that repair is revenue expenditure. Understand properly. Whenever you purchase a second-hand asset and you are repairing it for the first time, you are making the second-hand machinery available to use. So that first time repair will be capitalized. It will be capitalized. Is that clear? But normally if you make repair expenditure, if you incur repair expenditure in between the usage of machinery, let's just say after 2 months, 3 months, then that cannot be capitalized. That is a revenue expenditure. Is it clear? Is it clear? Yes. But here this is first time repair is happening to make the asset available to use. That's why we are capitalizing it. Okay. So what would be the cost of this machinery? Not 3 lakh. It will be 3 lakh plus 60,000 plus 40,000. So that's equal to how much? 4 lakh, isn't it? See here, 3 lakh plus 60,000 plus 40,000, that's equal to 4 lakh. Okay. So 4 lakh will be the cost of that machinery. Fine. And then see, they are saying on 1st July 2019, another machinery was purchased for 2,60,000. Fine. Okay. On 1st July 2020, the first machinery having become outdated was auctioned for 3,20,000. So here they are disposing of the first machinery, that 4 lakh machinery. So let's just see this on the timeline. It will become easy for us to understand properly. Okay. So see the timeline over here. First, what happened? First, we purchased the machinery on 1st January 2018 for how much? For 4 lakh. 3 lakh plus 60,000 plus 40,000. That's 4 lakh. That's the cost of the machinery. On 1st July 2019, so that's in the next year, right? So the year will end on when? See the question, when they are saying on 31st December, right? Provide the depreciation on 31st December. Depreciation is always provided at the end of the year. So this is at the end of the year, 31st December. Year end is 31st December 2018. And then the next year, what happened? See, on 1st July 2019, another machinery was purchased for 2,60,000. So let's just call this first machine as machine A and the second machine as machine B. For how much we purchased this? 2,60,000, right? Yes. On 1st July 2020, so that's in the next year. So now again the year will end 31st December 2019, and then in the next year, see, on 1st July 2020, the first machinery having become outdated, this machinery has become outdated, so it was auctioned, it was sold for 3,20,000. Machine A was sold, machine A, S means sold, it was sold for 3,20,000. Is this clear? Simple. And on the same date, on this 1st July 2020 only, what else happened? Another machinery was purchased for 2,50,000. So we purchased another machinery, let's call that as MC. Okay. MC, 2,50,000. Machine C, 2,50,000. Is it clear? Simple. And then what else happened? Depreciation, here on 1st July 2021, the second machinery. So 2021 means you have to end the year. This is in the next year. So 31st December 2020 will be the year end of this. And then in the next year, in 2021, what's happening? On 1st July 2021, the second machinery was also sold off. The second machinery means machine B was also sold off. Machine B is sold for 2,30,000. Was sold off and it fetched. We got 2,30,000. Is this clear? Simple. Depreciation was provided on machinery at 10%. 10% is the rate of depreciation on the original cost. Now by this sentence we can understand, here we have straight line method, SLM method. Okay. Annually on 31st December under the straight line method, prepare the following accounts in the books of the company. Which accounts they are asking for over here? They are asking for the machinery account, which is the asset account for the years ending December 31st, 2018 till 2021. So for this entire timeline they are asking 1 year, 2 year, 3 years and 4 year. Yeah, 4 years. This thing you have to prepare. Yeah, 1, 2, 3, 4. Yeah, one more is there now here. 31st December 2021. This is the year end. Okay, so you have to prepare the account for the 4 years. Fine, easy. So now they are asking machinery account and they are also asking machinery disposal account. You see, they are asking machinery account as well as disposal account, and here provision is not maintained. So what's happening? Which case is this? There is no provision, but you have to prepare machinery disposal account. So this is the case 2. Okay, this is case 2 of the accounting treatment which we do regarding the disposal of PPE. It's really simple, don't worry, it's really simple. Let's just first prepare the working note for the calculation of depreciation, WDV and profit and loss. Okay, let's do that first and then we'll move on to the ledger accounts. Now here we have the working note for the calculation of depreciation, WDV and profit or loss on disposal. Let's begin. Here we have got 3 machines as we just read the question. We have machine A, machine B and machine C, isn't it? So let's start. Method is straight line method and the rate of depreciation is 10% as said in the question. So first what happened, we purchased this machine A for 4 lakh. So let's just write that cost machine A 4 lakh, and then the year end has come over here, 31st December 2018. On this date we have to charge the depreciation and the depreciation rate is 10%. So 10% on 4 lakh would be 40,000. You have to charge the entire year depreciation because it was purchased in the beginning on the first day of the year, 1st January. So entire year depreciation, that's 40,000. Clear? Simple. And then what else happened? Nothing else, right? In this year nothing else has happened. No depreciation for MB or for MC, right? Now the written down value on this date on 31st December 2018 would be what? 4 lakh minus 40,000, that's equal to 3,60,000, isn't it? Yes. After that, you know what happened? Here come to 1st July 2019, we have purchased machine B for 2,60,000. Okay, cost machine B 2,60,000. Right now we have to charge the depreciation, right? Come over here, 31st December 2019, this is the year end. Now you have to charge the depreciation. How will you charge the depreciation? What is our, our method? What do we do? What is our technique? The technique is you just have to stand over here and look back. How many machines do I have, right? What is the rate of depreciation? For how long did I have these machines for? Machine A, I have it for this entire year. So for machine A, I will calculate the entire year depreciation. So that is 40,000. How is it 40,000? It's 10% now. Shouldn't we take 10% of this 3,60,000? Of course not. This is straight line method. In straight line method, you have to calculate the depreciation on original cost, isn't it? Not on the written down value. Is this clear? So 40,000. So 3,60,000 minus 40, that would be equal to 3,20,000. That's the WDV on this date, 31st December 2019. Okay. Now come to the machine B. Now for how long did you have this machine B? You have this machine B for only 6 months, from 1st July till 31st December, isn't it? July, August, September, October, November, December, only 6 months, right? So you have to charge only 6 months depreciation on this machine B. So how much that would be? Let's see, 2,60,000 into 0.10 into 6 by 12. Okay, you have to proportionate. That's equal to 13,000. That's equal to 13,000 depreciation. So 2,60,000 minus 13, that's equal to 2,47,000. Clear? Easy. Now for the machine C, no depreciation because you don't have machine C on 31st December 2019. Clear? Right. Now let's just go forward. Now what happened? Come to 1st July 2020. Now on 1st July 2020, 2 events have happened, right? First, you have sold off your machine A for 3,20,000. Now when you sell any tangible fixed asset, what you have to do? You have to follow 3 steps. You have to do 3 procedures. The first is calculate the depreciation on it. The second is calculate the WDV on the date of sale. And the third thing is calculate profit or loss made because of disposal, right? So let's do that. First, calculate the depreciation on the machinery you have sold. So see, what's the shortcut whenever you sell the machinery to calculate the depreciation? You have to see from the beginning of the year till the date of sale. So from 1st January 2019 till 1st July. So January, February, March, April, May, June. You will not take July because it's 1st July. So 6 months. So you have to charge 6 months depreciation on machine A. 6 month depreciation. So the cost of the machine A was 4 lakh into 0.10. We know that's 40,000, right? 40,000 is the annual depreciation, but can we take 40,000? No, we have to proportionate it. 6 by 12, that's equal to 20,000. So minus 20,000, right? 3 lakh 20 minus 20,000, that's equal to 3 lakh. Now this 3 lakh is what? This is the WDV on the date of sale. What is the book value in the company's account, in the company's book, in the business books? Yeah, that's 3 lakh. So this is the WDV on the date of sale, written down value in the date on the date of sale. Fine. Now what you have to do? You have to calculate profit or loss on disposal. Two procedures are completed. You calculated the depreciation on the asset which you have sold, and you calculated the WDV on the date of sale. Now calculate how much profit or loss you have made. How do you do that? You have to compare the book value with the sale value, right? So just 3 lakh is the WDV on date of sale minus sale proceeds of MA, machine A, that's 3 lakh 20, right? It was said in the question, 3 lakh 20. So 3 lakh minus 3 lakh 20, you can easily understand you have made a profit. The sale value is more by 20,000 than the book value. So of course you have made a profit of 20,000. Is this clear? Simple and straightforward. Okay, right. Now let's just go to machine B. In machine B also we have to charge the depreciation, right? Here on 1st July, okay, on 1st July we are completed with the sale procedure, the disposal procedure, and on the same date we have purchased another machine, now machine C. So machine C is purchased of 2,50,000. Fine. Okay. So machine C is purchased 2,50,000, and then we have to go to the year end, that is 31st December 2020. On this date, what do we have to do? Again, we have to charge the depreciation. This is the year end. What is the technique? Stand over here, look back. How many machines do I have? What is the rate of depreciation? For how long did I have the machines for? Right? All these questions you have to ask yourself. Now here, if you look back, you have only two machines, machine B and machine C, right? Machine A is gone. Okay, so on 2020, yeah, here 31st December 2020, you will charge the depreciation on machine B. Okay, 26,000. How is it 26,000? 2,60,000 into 10%. This is the original cost. Original cost into 2,60,000. Original cost into 0.10. That's equal to 2,60,000, because the machine B you purchased in the previous year in middle. For this year, for 2020, you have it for the entire year. So entire year depreciation you have to charge. Is this clear? Simple and straightforward. So 2,47,000 minus 26, 2,47,000 minus 26, that's equal to 2,21,000. 2,21,000 written down value on 31st December 2020. Fine. Okay. Now come to the machine C. In machine C also you have to calculate the depreciation. Now for machine C, understand you have purchased this in between the year. So you have to charge proportionate depreciation from the date of purchase till the date of year end. Okay. Date of purchase till the year end. Is that clear? So let's do that. From 1st July till 31st December is 6 months. Okay. So 2,50,000 is the original cost of the machine C, into 0.10 is the rate, into 6 by 12, that's the months of depreciation. So that's equal to 12,500. Fine. So 12,500 would be the depreciation on machine C, and if you subtract 12,500 minus 2,50,000, that's equal to 2,37,500. That's a WDV on 31st December 2020. Clear? Easy. Now here sale procedure is done now of machine A, so machine A is completely gone. Now let's talk about the next year. In the next year, what's happening? In the next year, if you see in the timeline what's happening? Check the timeline, follow the timeline properly. If you get the timeline right, your working note will be right. If your working note is right, then your ledger accounts will be right. Okay, that's the way you have to follow the chronology. Okay, so now 1st July 2021, what's happening? Here machine B is sold for 2,30,000, right? So again you have to follow that procedure, 3-step procedure. First you have to charge the proportionate depreciation on the machine you have sold, calculate the WDV on date of sale, and then you have to calculate the profit or loss. Let's do that. See here, it's really simple, it's not difficult. What you have to do, first charge the depreciation minus depreciation at 10% for 2021. Okay, for 2021, but now we are specifically talking about machine B. So see, on machine B you have to calculate the depreciation. The original cost is 2,60,000 of machine B, right? 2,60,000 into 0.10 into 6 by 12. How 6 by 12? From beginning of the year till the date of sale. That's 6 months. 1st January 2020 till 1st July 2021. That's 6 months. So 6 months depreciation, that would be equal to 13,000. Okay, so minus 13,000, subtracting 13,000, you will get what? You will get the WDV on the date of sale, that is 2,08,000. Okay, 2,08,000 is the WDV on the date of sale. From this you have to subtract the sale proceeds, sale proceeds of machine B, which is given in the question. It's 2,30,000. So subtract that, 2,08,000 minus 2,30,000, you will get profit or loss. See, 2,08,000 minus 2,30,000, that's equal to 22,000. Understand properly, it's really simple. Your book value is 2,08,000 and the sale value, the sale proceeds are 2,30,000. So sale proceeds are more. You have got more money. So immediately you can understand you have made a profit of how much? Of 22,000. Easy, simple. So machine B is over. Machine A is also sold. You have calculated everything, the 3 procedures. Here also the same thing. And then come to the machine C. Now machine C is the only machine you have at the year end on 31st December 2021. So you are standing over here, you are looking back, how many machines do I have? You have only one machine, man. You have only machine C, right? So calculate the depreciation of machine C. That's 10% on 2,50,000 because you have the machine C for the entire year, right? You had it for the entire year. So 2,50,000 into 0.10, right? No proportion, okay? No time proportion. So that's equal to 25,000. That's equal to 25,000. So 25,000 would be the depreciation for 2021 on machine C. So 237,500 minus 25,000, that's equal to 2,12,500. That's the WDV on the last day of the year, of the entire timeline actually, year end 31st December 2021. So the question is completed, right? The entire calculation is completely finished. Now what you have to do is just use this working note and just fill the numbers, just plot the numbers on the ledger account. Okay, let's just do that. Now see, here we have the machinery account, which has debit balance, opening balance on the debit side, closing balance on the credit side. Okay, let's begin. See, first what happened? First we purchased a machinery for 4 lakh, right? Isn't it? That's what we did. So machinery account is increasing because of the machinery you have purchased through bank account. To bank account 4 lakh you have to take. Okay, here there is a mistake. It's you don't have to take it like this. Just write to bank account 4 lakh. In the bracket you can write purchase price plus repairs plus installation, like that. Okay, so it's 4 lakh. Fine. And then what happened in the same year? Nothing else happened. So you came at the year end 31st December 2018. On this date you have to charge the depreciation. You know how much depreciation you have to take? That is 40,000, isn't it? Yes, depreciation for 2018. So machinery account is decreasing because of depreciation, 40,000. You take the closing balance, buy balance carried down on the credit side, and in the bracket you can write machine A. Fine. 3,60,000, isn't it? 4 lakh on both the sides, and then 4 lakh minus 40, that's equal to 3,60,000. Now that 3,60,000 you can also see in the working note, because that's the WDV, right? You can also see that in the working note. See here, right? WDV, the closing balance on 2018, at the end of 2018. Fine. Okay, so that's done. 1 year is completed. In the timeline you are here right now. Okay, you are here right now. Now let's go forward. In the next year, what happened? In the next year, if you can see, a lot of things are happening. In the next year, it's just that, see in the timeline, we have purchased one machine on 1st July 2019 for 2,60,000, the machine B, right? But before that, let's just take the opening balance. This closing balance will become opening balance over here, to balance B by D, 1st January 2019, first day of the year, 3,60,000, and you have purchased machine B. So machinery account is increasing because of machine B to bank account, right? Machine account is increasing because of the money you have paid to acquire that machine B to bank account, 2,60,000, isn't it? Yes. And then nothing else happened in this year. Come to the year end, right? See the timeline. Keep on looking the timeline, right? You are on 31st December 2019, so you have to charge the depreciation. So you have to charge the depreciation on two machines, machine A and machine B. right? So 31st December 2019 by depreciation. By depreciation, isn't it? Machinery account is decreasing because of depreciation. It is getting credited because of depreciation. Yeah, that's the logic. Now you have already done the calculation. On machine A it's 40,000, on machine B it's 13,000. 40,000 and 13,000, that's equal to 53,000. You already know how we have calculated and everything, isn't it? Yes. And then what you have to do, you just have to close the account. Now here there is a bit mistake over here. They have taken B by D, but it's actually C by D. Okay, it's actually C by D, right? So how will we calculate this closing balance? It's really simple. Just see 3,60,000, right? 3,60,000 minus the depreciation of 40,000, that's equal to 3,20,000, right? The whole figure you can easily calculate. 3,60,000 plus 2,60,000, that's equal to 6,20,000. 6,20,000 and then 6,20,000 minus 53,000, that's equal to 5,67,000. But now how did we calculate this? You can see this in the working note. It's directly there. In the working note you can easily find, see, 3,20,000 and 2,47,000. See here, 3,20,000, 2,47,000, right? So all they did over here was just took the opening balance. Yeah, 3,60,000. 3,60,000 is the machine A. Machine A opening balance minus the machine A depreciation, that's equal to 3,20,000. Okay, and then the cost of machine B 2,60,000 minus 13,000 depreciation of machine B, that's equal to 2,47,000. But what you have to do, just look at the working note. All the calculation is completed. See here, 320 and 247. These are the closing balances, the WDV on 2019, at the end of 2019. Clear? You get that, right? Yes. Moving forward, what else we have to do? Let's see. In the timeline now, where are we? We have finished 2019, year 2019. Now we are on 1st July 2020. So here two events have happened. The first is we have sold machine A 3,20,000 for 3,20,000. So what we have to do over here, understand, it's really simple. What you have to do over here is you have to take the asset from the machinery account and throw it in the asset disposal account. You all know the treatment, the logic and everything. Asset disposal account is just a trash can. We first take the asset over there and then we sell it off, right? That is the logic. So here in the question it was said, now we have to maintain machinery disposal. So whenever you will sell and you're maintaining machinery disposal account, then first you have to take the asset from the asset account to the machinery disposal. So how that will happen? It's really simple. You will, reduce the machinery account because of machinery disposal. Understood? You will reduce the machinery account because of machinery disposal. Is it clear? But now let's understand what is the value you will be taking over here. Okay, let's understand how you will be taking this 3 lakh. How did this 3 lakh came into the picture? It's really simple. You have done the working note. Now from working note you can understand this. If you see in the working note, what did we do? We sold machine A now. So machine A was sold over here. See, right? First we charged the proportional depreciation of the current year, 20,000. We subtracted that, and here it was 3 lakh. What is this? What is this 3 lakh? I told you this is the WDV on the date of sale, and that is what you take over here. That is what you take over here. WDV on the date of sale. Let me just write that. Okay, this is what? This is WDV. Okay, this is what? This is WDV. Fine. So you have to take the WDV, and you will get that from the working note. Is it clear? Simple. Now this 5,67,000 will come over here. This is the opening balance. The closing balance will become opening balance. And machinery disposal, you understood. Machinery is decreasing because of machinery disposal. The value is going to machinery disposal, and then from machinery disposal we will sell it off. Okay, we'll see that after the machinery account. Don't worry. So machinery disposal you understood, and then you have to charge the depreciation. Actually, first only you charge the depreciation. The depreciation you have to charge now for 2020. You are at over here. Where? Here. 1st July 2020. Here we sold machine A now. So we have to charge the depreciation also. First we charge the depreciation. So depreciation is 20,000, and then for machine B it's 26,000, and then on machine C it's 12,500. So all those depreciation will come over here as usual. You all know machinery account is decreasing because of depreciation. 20,000 on machine A, 26,000 on machine B, and 12,500 on machine C. Clear? In total that's equal to 58,500. All the figures are coming from the working note. Clear? And you have to do the working note, otherwise you will lose the marks. Okay, fine. So 58,500 is the the total depreciation of 2020, and then you have to find the closing balance. Now it's not required actually to find the closing balances separately like this, but it's better presentation. If you do it like this, then definitely you will get full marks if you do everything properly, okay? Because it's a great presentation actually. You are, you know, bifurcating everything, showing the balances separately. It's a really great presentation. So much clarity is there in the ledger account. Okay, fine. So by balance carried down, how you will find this? See, machine A is completely gone. We have taken it to machinery disposal. We have sold it off now. So there will not be any closing balance of machine A. Machine A is gone. Is it clear? Yes. But the remaining two machine B and machine C are there. So you have to properly bifurcate. How will you do? It's really simple. See, understand. See the working note. In working note, after 2020, see the written down value 2,21,000 and 2,37,500. So 2,21,000 and 2,37,500. Is that clear? Or if you want to see how it will be done over here, then see, it's really simple. Machine C was purchased for 2,50,000. 2,50,000 is the cost minus the depreciation of the current year on machine C. Okay, the same thing you have to take. 2,50,000 minus 12,500, that's equal to 2,37,500. And regarding the machine B, what was the opening balance of machine B? You will get that over here. Opening balance of machine B is 2,47,000. So 2,47,000 minus 26,000, that's equal to 2,21,000, the closing balance of machine B. But why are we looking in the ledger account? Just see over here and do it directly, because you have done the working note now. So just use properly the working note. Fine. So yeah, so this side will be the bigger side. 567 plus 250, that's equal to 8,17,000. Okay, 8,17,000. Write that on both the side. 8,17,000. Let's just do that in calculator to give you guys more confidence. Okay, so see, 8,17,000 minus, you know, 3 lakh minus 58,500, that's equal to 4,58,500. Clear? Easy. Fine. So after this, where are we on the timeline? In the timeline, if you see, we are on 31st December 2020 now, right? At the year end now, these two things are over, and now here we are, 31st December 2020. Now we have to go forward, 1st July 2021, right? In the next year, here we are selling another machine B for 2,30,000. So let's see how it will be happening. So this closing balance will become opening balance. This closing balance will become opening balance over here, to balance B by D, 4,58,500. You all know. Okay. And then on 1st July 2021, we have sold off the second machine. That's the machine B, right? Here, machine B, isn't it? For 2,30,000. So now, how will you take the value in machinery disposal? What you have to take over here? I've always told you, you have to take over here the WDV in the case 2, right? This is case 2. We are not maintaining provision over here. So that is why you are taking WDV over here. If you were maintaining provision, then you would have taken original cost over here, isn't it? Yes. But now here you will take the WDV. Okay, that's 2,08,000. 2,08,000. How did it is 2,08,000? See here, it's WDV. You have to first charge the depreciation. So depreciation for 2021 is 13,000 and 25,000, right? After deducting this 13,000, 2,08,000 is the WDV on the date of sale. On 1st July 2021, the book value of machine B is 2,08,000. So this value you have to take to machinery disposal account. Okay, 1st July by machinery disposal, 2,08,000. Clear? Easy. And then yeah, depreciation is also there. So depreciation was how much? 13,000 and 25,000. So that depreciation you have to take. So machinery is decreasing, right? Machinery account is decreasing because of depreciation, 13,000 and 25,000. Clear? Easy. In total it's 38,000. And then the closing balance. How will you calculate the closing balance? And why there is no bifurcation over here in the closing balance? Here there was bifurcation, here there was bifurcation. Why not bifurcation over here? Let's understand. 4,58,500 opening balance, that's the bigger side, right? This is bigger side. So write that on both the side. 4,58,500. 4,58,500 minus 2,08,000, yeah, the disposal, minus 38, the depreciation, that's equal to 2,12,500. Now this is the closing balance. Now you have to understand, machine A is sold, machine B is sold, so the only remaining machine is only the machine C, isn't it? So that is why there is no bifurcation, because 2,12,500 is the closing balance of the machine C. This is entirely machine C, so no bifurcation is required. It's already separate. Is that clear? Simple, you understood now. 2,12,500 is the machine C's closing balance. Okay, so machinery account is completely over. Okay, first year, second year, third year, and then the fourth year, right? And the question has another requirement, that was the machinery disposal account, isn't it? So we have to prepare that machinery disposal account. It's really simple to prepare. What is machinery disposal account? It's just a temporary dummy account. It's just a dustbin. It's just a trash can. What do you do over there? You just first bring the asset in it on the debit side and then sell it on the credit side, and then see whether you have profit or loss. Profit will come on the debit side, loss will come on the credit side. That's all you do with the disposal account. Take the asset on the debit side, sell it on the credit side. Okay, if there is a gap on the debit side, then that's profit. If there is a gap on the credit side, then that's loss. That's all. Okay, let's see. Machinery disposal account. First, see, in the machinery account, in the asset account, machinery disposal is coming over here, 3 lakh. What's the date? 1st July 2020. So see, 1st July 2020 to machinery. Okay, cross posting to machinery. Okay, machine A in the bracket, if you want you can write. So that's 3 lakh, the value from there, 3 lakh. And then on 1st July 2020, as said in the question, okay, as said in the question, we have sold it, machine A, for 3,20,000. 3,20,000. 1st July 2020, by bank 3,20,000. So just compare. This is the book value. This is the sale value. So 20,000 extra you have got. So that 20,000 extra is your profit, isn't it? 3,20,000 is bigger now. So write that on both the sides. So there will be a gap of 20,000 over here. Balance of 20,000. So that balance, that gap is profit, and that will flow to profit and loss. So you have to take over here to profit and loss account. You can also say to profit on disposal, right? It's up to you. Fine. So that's over the first sale. The second sale, see, the second sale is happening on 1st July 2021, right? In the next year, by machinery disposal, machine B was sold for how much? It was sold for, let's see, it was sold for 2,30,000. But here WDV comes, right? So this WDV will flow over here. Do not think like this. For how much it was sold? Okay, it was sold for 2,30,000. No, 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 no. See, you have to take WDV over here. First, you bring the asset at the book value and then you sell it. Is that clear? First, bring it at the WDV, at the book value, and then you sell it on the credit side. So it came at 2,08,000 in the dustbin, in the trash can, in this disposal account. Okay, to machinery 2,08,000, and then you sold it for 2,30,000. So that's buy bank. Okay, machinery increased because the asset which came in it, and then it decreased because it went out or it decreased. Okay, the asset you sold it off now, so machinery disposal decreased. By bank account 2,30,000. So the difference between 2,08,000 and 2,30,000 is 22,000, isn't it? 22,000. So that 22,000 is your profit. The gap, the missing, the balance over here would be the profit on the debit side. To profit and loss account or to P&L account, 22,000. Is it clear? 230 on both the side. 230 minus 2,08,000, that's equal to 22,000 profit. Simple and straightforward. Okay, so this was the illustration 9, but of our series problem 8. Here we saw that we are selling the asset in between the timeline, right? And here we had straight line method, so that's why the job was a little bit simple. If it was WDV, then it gets a little bit complicated, but don't worry, we have solved problem regarding that also in the previous video. So just go over there and watch. Okay, you will see how easy it is. So this was case 2 accounting treatment. There is no provision over here, but we have to maintain asset disposal account. At that time, what you have to do, we saw it was really simple and straightforward. Now just go and practice some similar problems on your own where you have to prepare disposal account. Okay, so that's it for this video. See you in the next video. Bye.